Good morning and welcome to the morning market review. It's the 30th of January. My name is Russell Shaw. I'm a senior market specialist at FXCM. And I'll just go through the disclaimers before we get on with the rest of the live stream. And what I'll do is I'll just bring up our high risk investment warning. I'll keep this on screen for a few moments. And hey Anna, good morning to you and welcome. I'm just going to keep this. Hey Raj, morning to you. Okay, let's bring up the market commentaries disclaimer. Okay, let's get on with the analysis, and what we can do is start off with the real rate and try use that as a try get that as a driver. And I may get you to sort of log out and log back in. See if that helps. Just let me know there. What we have here is the real rate, but things are happening. Things are happening on the real rate. Take a look how yesterday we closed below our line in the sand. In other words, we're looking for that reference candle reversal, and it looks like we're heading to the downside, doesn't it? So we can put in an arrow, sort of this as such. And what we can do is also take a look at the RSI, and the RSI is below 50. And the fact that it is below 50, I think, is suggesting to us that the market's finally starting to potentially price in a March cut. Yesterday, when I took a look, it was about a 50-50 chance of whether we'd get that rate cut in March. I'll see if it's updated this morning. But if we take a look at this on a weekly time frame as well, so let's just bring up the weekly time frame. And instead of looking at the area underneath the 50, take a look when we connect the lows here. It looks as if we're about to break this downwards trend line. Let's just make sure we get this as close. In other words, we might get a signal here. Let's just put in a 0.1. So if we break below 0.1 with the RSI, in other words, it breaks below that upward sloping trend line, and this is on the weekly basis, then I would suggest that we are starting to build up a momentum to that downside. And if that real rate starts being pulled down, that's important information for us to know as traders. The question is, well, okay, why is it so important for us to know as traders? Well, what we can do is we can put in the US dollar underneath. So let's just take a look at the FXCM US dollar basket. And what you can see here is that we've got a very close correlation. As the real rate moved up, so did the dollar move up, right? As the real rate moved down, so did the dollar move down. Okay, so if we get a break downwards here, and it looks as if that may indeed be manifesting. We've just got to keep an eye on it. But if we start seeing that breakdown, then we potentially get the breakdown in the US dollar here. Then we potentially, and if we get a breakdown in the US dollar, well, that will lift the majors. And all of a sudden, the real rate is now starting to give us something a little bit more concrete to work with. And that's something we've been looking out for quite some time. So the idea here is we carry on watching to see if the RSI breaks 0.1. And if it does, well, then we need to keep an eye on US dollar. Let's just take a look at US dollar a little bit more closer. I'm just going to share the weekly chart with you, and it's quite an interesting chart. So just showing that tab. This is the weekly. We're at that 30-week exponential moving average. A 30-week exponential moving average potentially acting as resistance, right? Potentially acting as resistance. So the question is, are we going to break to the downside? Now, what we have is a FOMC meeting tomorrow. It's a statement and then followed by a press conference. I don't think that there's going to be any movement on the rate side, but the communication, if we get a dovish communication coming out of the FOMC, well, just let me show you something on the daily chart here. So I'm just going to switch this to the daily time frame. And we've got something here quite interesting. Let's just zoom out, take this arrow down, and what you have on the US dollar here is it looks like a dead cat bounce, looks like a bear market rally. We'll keep an eye on it, but what kind of pattern is this? Let's put it. So you can see we've got some sort of pattern here. It looks to me like a wedge. It looks like a bearish wedge. An upward sloping wedge is typically a bearish wedge. If it is a bearish wedge, it needs to complete. And if we get communication out of the Fed tomorrow that is dovish, then we potentially get that break down. Well, that's not a surprise. That's not a surprise given what's happening with the real rate. Real rate starting to break down, isn't it? Okay, so that's kind of our clue for what I think is going to happen tomorrow when and it's at 7 p.m. Hey KD, good morning to you. And that's about 7 p.m. GMT. I think that's when the statement's released. 7:30 p.m. GMT is when we get the press conference. So I think there is a portent to potentially lower rates, and I think that's going to potentially bring the dollar down with it. Now that I'm going to tag on subject to correction, because obviously forecasting that comes with error, right? So the fact of the matter is, I think that we are setting up nicely, but I think that we've got to be realistic and understand that nothing's written in stone yet. But if we do get the real rate to push down, what's happening on the risk side of the market? So if it's going to push the dollar down, remember the dollar is considered a safe haven. Well, if the safe haven is being sold down, there's obviously some sort of reallocation of capital. And the question is, well, where is that capital being reallocated to? And if it's going out of a safe haven, well, logic dictates that it's going into the more risk heavy, the risk on type of instruments or asset classes. Well, what's that would be equities, right? So let's take a look at the DAX and see how the DAX looks to be setting up. Yesterday when we looked at DAX, it looked quite positive, didn't it? Let's go back to our weekly chart and just take a look at DAX, see what kind of signals we're getting given that the the real rate starting to come down ahead of that all-important FOMC meeting tomorrow. Okay, let's take a look at DAX. Okay, this is DAX, right? And we looked at this yesterday. I'm just zooming in. Just bear with me here. Okay, take a look what's happening here. We pointed out a bullish reference candle reversal. That's what we pointed that out yesterday. And it looks like the swing is continuing. It looks like the swing is continuing. And take a look how we marked this break in the RSI, by the RSI breaking above that downward sloping line at point 1. Okay, so it's looking pretty good, right? Let's go now to the daily chart, but let's take a look at that in terms of our zones. So let's go through to DAX and the zones and see if there is some information that we can glean. Okay, here we go. Sharing that tab with you. I think we need to zoom in here. Anna, have you sorted out your video? Just let me know if you are still online and if everything's sorted out for you. All right. We did point out that it bounced off of support going back to the 17th of January. It moved from zone 3 all the way into zone 1. Zone 3 being the lower blue, lower red. It moved out there into... Okay, excellent. Is everything okay, Anna? Okay, brilliant. All right. And you can see we're in zone 1 between the upper blue and the upper red. Okay, so we're in the bullish area of the DAX. Well, that's good information to know, specifically because it seems like real rates coming down, right? Real rates, although we're looking at the US real rates, the supposition here is it's globally influential, right? It's globally influential. Now, we've got these arrows pointing up and down. What do those arrows pointing up and down mean? It's showing you the expansion in the volatility. There's expansion in volatility while the DAX is in zone 1. It's in the bullish area. That's terrific. That's exceptionally bullish. That's exceptionally positive. So what we can do is we can go down to the DAX hourly chart and we can see if there's some sort of signal that's manifesting on the hourly chart, just in terms of our timing. Just in terms of a timing. So I'm just going to share that screen with you. All right, there we go. You should be able to see it. Now, the signal was actually given yesterday. Okay, the signal was actually given yesterday, and it's got the green 5-hour exponential moving average above the orange 10-hour exponential moving average, and we've got the stochastic that has popped upwards. Now, we said yesterday, watch for those signals. Don't predict, rather react. Watch for the crossover. The crossover came. Watch for when I say the crossover the EMAs. Watch for the stochastic. Stochastic moved up. Where is it now? It's in the upper quintile. Well, there's no such thing as overbought or oversold signals on stochastic. The mathematics doesn't make provision for that. But what it does do is it makes provision for momentum in the upper and the lower extremes. We're in an upper extreme now. We have an underlying positive momentum. As long as we stay in the upper quintile, which is above 80, then there is going to be some sort of momentum support and potentially higher DAX prices ahead. Potentially. Now, I don't know if the stochastic is going to slip out of the upper quintile or not. Listen to what I'm saying very carefully. As long as it holds the upper quintile, we're batting on a good wicket, right? We're basically doing okay. If it drops out of that upper quintile, well, make sure you've got your stops in if you are trading it. Okay, if you are trading it, just make sure there's stops. So now, if there is some potential dollar weakness, if there is, we should see some sort of support for gold. Gold's been on the watch list for quite some time. Let's just do an analysis of gold. Now, yesterday when we looked at gold, it was very neutral. It was very neutral. How's it looking sort of 36 hours before the FOMC meeting? Let's just take a look at gold and do an analysis there. So we'll go through to the weekly chart and we'll start there. So we're going to do a top-down analysis. And all right, let's just bring this up. I'm going to share that screen with you. Okay, so there's no doubt that gold has improved over the last 24 hours. You can see we've got this blue candle here. So gold has got a bid, so to speak, but I think it's got to do more for us to be comfortable. Yes, it is above that 30-week exponential moving average. And yes, that 30-week exponential moving average is pointing up. Terrific. Yesterday, what we did is we drew in this downsloping trend line on the RSI, and it would go a long way to settling my mind if the RSI broke above that downsloping trend line at 0.1. If we get a break, then I think there's an underlying momentum that's starting to build. I think that's very plausible. I think that's very possible. Why is it plausible? Why is it possible? It's because we saw the real rate coming down, and that's coming down ahead of the FOMC. And I think the FOMC potentially comes up quite dovish tomorrow. Why do I think it's coming up quite dovish tomorrow? I think we're at a Goldilocks economy at this point in time. Why do I think there's a Goldilocks economy? Well, advanced GDP last week came out Thursday for the quarter, 3.3%. That's a decent GDP number. It was ahead of expectations. What about inflation? Inflation looks to be moderating. The core PCE came out on Friday, 2.9%. On a month-on-month basis, it's 0.2%. In fact, it wasn't 0.2%, it was 0.17%. On a monthly basis, 0.17%, where if you annualize, is just above 2%. We're right at target there. So you can't tighten anymore. You can't tighten. The rates are doing their jobs. There has to be some sort of moderation. And it just seems that would lead dollar down, lifting up the risk side of the market, right? So let's just take a look at gold now on the daily chart. All right, I'm just going to share that screen with you. It's more positive than it was yesterday. We've now moved to the border between Zone 2 and Zone 1. So we're just about to move into Zone 1. Zone 1 is the bullish area. Moving into Zone 1, moving into the bullish area is not really good enough. Once it moves into that bullish area, there has to be some sort of band expansion. So we kind of got steps that we've got to watch here. So the next step would be to move into Zone 1. And then the step following that, sort of the linear step after that, would have to see the zone expansion to say that, okay, potential breakout taking place. But there is a positive aspect here. Take a look at that RSI. It's popped above 50. It's popped above 50. So we've now gone to the bullish side of the RSI. So the fact that we're on the bullish side of the RSI, of course, is a warning, but a positive warning. It's a positive warning. It's suggesting that the upside momentum is building on the gold chart. All right, let's just take a look at the gold on an hourly chart. Just bear with me while I bring that up. Okay, so this is interesting. I'm just going to share the tab with you. So there is some resistance above us on the hourly, around about this 2040 level. There's some resistance, but just take a look at that stochastic. Okay, the stochastic here is the clue. If we make it through to the 80 plus area, then potentially gold starting to swing to the upside. So I think that there is some good potential momentum that's building here. To really prove me right, we have to get into that upper quintile and push higher. All right, let's take a look at one more chart, just one more chart, and there is all right, Raj, we shall speak tomorrow. Have a good day. We'll look at one more chart. We'll look at the Nasdaq just because this week's tech heavy in terms of the results. So let's just go through to Nasdaq 100. Again, top-down analysis. Now, Nasdaq is very sensitive to rate movements, and we've seen that rate movement coming down. We're getting a whole lot of tech earnings. What's it looking like? Well, it's looking quite positive. You can see that the RSI is above 50. We are above that 30-week exponential moving average, and that 30-week exponential moving average pointing higher. Okay, and let's just take a look and see what it's looking like with the zones. And this is quite an interesting chart. It's in zone 1. Look at the Bollingers, how they're starting to expand. So we're getting a nice volatility impulse there. And of course, we are just sitting nicely above 50. The Nasdaq showing some really nice momentum. And let's just take a look at the hourly chart just to end off here. Okay. So Nasdaq is rolling backwards. We are at the upper quintile. Given how positive the longer-term charts are, I'd be looking at support areas. So here, I'll be looking here to see if we can get into a potential dip in the uptrend. What are the thoughts on how? So Nvidia is going to have a terrific year, and I think Microsoft is. Meta, Google. I think they're all going to have really good earnings. When we took a look at the Magnificent Seven last week, Anna, the charts which tend to lead. Because of sentiment, suggests that we're probably going to get some decent results out of them. But Nvidia, especially the CEO, Jensen, I hope I'm pronouncing this right, Jensen Huang, in Taiwan, this week just said that 2024 is going to be a beast of a year for Nvidia. And I think Microsoft has embraced artificial intelligence. Google's building on that. It's all that artificial intelligence story. I'm of the opinion that the productivity gains there still have to be priced in. So I think we're sitting really. I think we're doing really nicely in the markets, and I think there's still potential there. So I hope that answers your question. All right. There might be some sort of dip in an uptrend here in the Nasdaq. That's a potential point of to exploit the uptrend by buying into dips. And let's just see if we pull back to that support level and see how we react at that support level. Okay, that's as far as we're going to go today. If you enjoyed this webinar, if I may request you just sort of click that boost button. It just helps the webinar get it helps with our viewership. So if you enjoyed this, just click on that boost button. But otherwise, if there are any questions, go ahead and type those in. And I hope that I answered your question. Nvidia, again, I think is going to have a beast of a year. I think Microsoft's doing really well. Google. Are we not getting too frothy? I don't think so. My feeling is no. That's my feeling. I'm going to just tag on subject to correction. No, I can't just go on and on. I think there's going to be profit taking, and I think there'll be some pullbacks, and I think that the media will come and say that we are getting ahead of ourselves. But by and large, the trends are holding up really, really well at the moment, and I think that there are still a lot of productivity gains to be priced into the stock market. in effect, what I'm saying is I'm bullish for now. I don't see signs of frothiness. In fact, see that we probably are in stage 2 of a bull market, which is improving earnings. I don't quite see elements of stage 3. What's stage 3? Rampant speculation. I just don't see that. Okay. Thank you very much, everyone. Let us wrap up here. Please press that boost button if you found this useful. Cheers, guys.